This month, Life Insurance Strategies Group is in Boston, our hometown. Last week, though, I was in Las Vegas at the annual Refocus conference. That's the conference of all the reinsurance companies, or the prominent ones around the world. And they get together to look at different ways to assess risk, how they work with carriers, and in turn, how those carriers then can issue products that they reinsure to clients. And being in Las Vegas, obviously, you're subjected to a lot of gambling. Now, I didn't do any gambling, but it has had me thinking about when people buy term insurance, sort of what that payout is versus the payout of slot machines. Now, stay with me for a second. So when someone buys a term insurance, remember, that's insurance only for a set term or period of time. So maybe 10 years, 15 years, 20, 30, even 40 years. And then that coverage goes away at the end of that time. So the payout on those term policies, according to the industry statistics that we can find, is somewhere in the neighborhood of no more than probably 3%. So 3% of term policy holders ever receive the death benefit, or in other words, die while being covered by a term policy. If we look at slot machines, the payout in slot machines is usually around 95, 96%. So I guess if you wanted to be kind of satirical about it, you could say you might be better off investing your premiums in a slot machine to get a better return than with term insurance. But that's obviously not something you want to do. So there are applications for term insurance. So obviously it's always great if you can buy permanent insurance where you have cash value that builds up. That cash value can offset higher insurance costs as you age, and so that policy can last your lifetime. But obviously, when you're younger, you might not have the money to buy a large permanent policy or permanent policy at all. So you turn to term insurance. Maybe you're newly married, you have young children, you have some business liabilities, and you just need coverage. Well, the good news is most term insurance today is convertible. So that means, let's say you bought a 30-year term when you're in your low 30s. And so by the time you're 60, you might have built up the money to be able to afford a permanent life insurance policy. Well, what do? You have this term policy that's probably going to run out in a couple of years. Well, hopefully it has a conversion feature. And that conversion feature usually comes with the ability to convert it, but without having to take a medical exam. So without presenting any medical evidence. So that's fantastic, because obviously the general phrase we use in life insurance is that you're really never healthier than you are today. For the most part, that's true. So being able to have a term policy that converts, when you need to have permanent coverage and coverage that lasts your lifetime, that's key. So look, don't take your term premiums and go to Las Vegas and play the slot machines. If you're not able to buy that permanent cash value life insurance policy, buy a term policy and make sure it's convertible, and then someday you will have that permanent policy. At Life Insurance Strategies Group, remember, we don't sell life insurance products. We help our affluent clients, individual and companies, make decisions involving complex life insurance matters. If we can help you, reach out to us at lifeinsurancestrategiesgroup.com.